Now the bear market has already begun in mother of all markets, US stock market on S&P 500. We brought a video where we discussed the several historical data. And if you have not watched that video, search on the channel about the bear market a couple of days back and you will find that video. Now the question arises is, once the bear market has begun, when will this bear market run will end? What is the bear market duration history? That is the topic of discussion today. But one hard facts I would like to bring to the notice of stock market participants, especially those who are beginners in the stock market, that we have a grocery market, we have a automobile market. Whenever there is a sale in grocery market or in automobile market, we rush to buy the product. Am I right in saying so, friends? If I am right, please write in the comment section of this video. Now, the stock market is the only place things go on sale during the bear market and people run out of store screaming, shouting, worrying, fearful. Please remember that before you make any rash investment decisions, you have to be cautious that what kind of stocks you should look out and find, which you'll find in your shopping list. We'll discuss all those steps today in this video. Friends, like this video right now, subscribe the channel, hit the notification bell so that you remain updated all the time. In the last video that we brought on your channel, we discussed about the bear market history since 1928. But we will focus our discussion in the bear markets that happened after the World War II. The reason being the frequency of the bear market prior to World War II was very, very high. It was every 1.4 years we witnessed or we came across a bear market. Now, post-World War II, there has been 7 bull markets which have officially doubled. And the recent bull market that started post-bear market of 2020 was the fastest ever doubling market in the history of the stock market. But at the same time, it also ended much quicker than earlier bull markets. Let us check out the stock market's bull run, which has doubled. Historically, the strongest bull markets post World War II has been plotted on a single screen. What we can see, there has been the strongest bull market during June 49 to August 56. Then friends, October 74, then August 82 to August 87, October 90 to March 2000, where we saw then dot-com bubble, then October 2002 to October 2007, then we saw a financial crisis in 2007, 2008. Then we had March 2009 to February 2020. And then currently we know that post-bear market that ended in March 2020. And we had seen a parabolic rise in the market. Market went too fast, too quick in the recent time and creating a history in the world stock market history that it became the quickest market to gain more than 100%. Now we are referring to a table where this was the quickest bull market is indicated on the table. What we can see that this bull market which ended on in 2022 lasted for 21.4 months and it has doubled its it has given a return of 114.4%. So if we look back to the various bull market post World War II, the average return stands at 156% and the median stands at 101%, while in terms of time, lasting for the bull market stands average is 57.8 months and median is 50.4 months. So we can see some of the bull markets were very, very strong, where money got a returns of nearly 4x, like in 2009 to 2020, and then prior to that 1992 year 2000, where we can see the bull market return was over 400%. Now let us have a look to the various bear markets post World War II, rather since 1950. Let me first emphasize that this particular bear market, which started in January 2022, as far as S&P 500 is concerned, it started in the first week of January 2022. So it's already a little over 5.5 months old. And if we compare the several bear markets in past 40 years or 4 decades, it is already older than 6 other bear markets. Only the dot-com bubble that happened in year 2000 and great financial crisis that witnessed a bear market in 2008 lasted longer. But this time, banking sector is in quite a robust position. This time financial crisis situation doesn't look to be coming. So this could mean that the bear market could be closer to the bottom than many are expecting. That we will see on the price chart also when we go to the price chart of S&P 500 after we complete this presentation. Now let us have a look to the data with respect to the several bear markets post 1950. Now we are referring to the data of various bear markets since 1950. Now typically what it indicates. Number one, let us take the S&P 500 changes, means drawdown, which has taken place in various bear markets. The average of several bear markets drawdown calculates to 29.8%, while the median stands at 24.6%. Now, in 2022, we have already seen the drawdown of 22%, which means if we calculate with respect to the median, another 2-3% possible downside looks to be imminent. Now, if we calculate even with respect to the average of 29.8%, so it looks something like another 7%. Now, in terms of time, because we know price and time corrections both are significantly important when we analyze the data. Now, what we can see, 5.5 months, this bear market has completed because it started in January 2022. So the average of the previous several bear markets stands at 11 months, while the median stands at 7.2. Now recall back what we discussed on your channel, that the possibility of volatility is there in 2022 because it is a midterm election year also, and normally in the midterm election year, especially when the previous year has seen a shallow kind of correction in the stock market, we tend to have a volatility at least in the first 3 calendar quarters, which means we are at the end of second quarter. Now another 3 months could be the end of the bear market based on this data. However, we will further discuss it when we go to the price chart of S&P 500. So what is next? Since the bear market has already begun, what is next? This question arises now. So the first thing is like the video, subscribe the channel, hit the notification bell. That is the next. And then friends, there is no denial that bear market is a bad news. But the good news is what happens 1 year after the bear market has begun. That is the key. Where lies the opportunity? What is that key? If you analyze the data of various bear markets post World War II, say since 1950 or so, what it indicates, from the date bear market has begun, next 1 year average return is 15% in stocks. Means stocks actually start doing well. And it is an attractive median of a return of nearly 24%. Now let us check the data. Now if you refer to this particular table, which indicates the several bear market post 1950, what we can see, the post the commencement of the bear market, these are the returns from S&P 500 index. What we can see, in majority of the time, post 12 months of the bear market commencement, we can see all over the green. In 1957, it has given a return of 31%. 62, it has given a return of 26%, then 24%, 10%. The exception is in 1973, which is yielded a negative return of 28.1%. And then, friends, it has given in 82, 32%, 87, 23%. Then it was a negative return in 2001 by nearly 1.2%. And then in 2008, which was a financial crisis related bear market, it has given a negative return of 29%. But if we take the weighted average of all these returns, the average calculates to a return of 15% post commencement of the bear market. Means we are talking this thing, the bear market has begun in the month of June. So the possible average return in the next year could be 15%, and median stands at 23.8%, nearly 24%. Now the question arises is, how quickly a stock market may found its bottom? Now in this area, there is a very wide range if we check the historical data, as low as 11 days to as high as 18 months. Now let us check it out, the data. How soon after a bear market starts do stocks bottom? It all depends. The data is all over, because it has taken as less as 1 day to as high as 576 days. So we have to focus on two things. One is the median, which is 81.5 days. And secondly, correlate with the what historical data say in midterm US presidential election year, which is 2022. So there, first 3 quarters of volatility, then stability in the market. So we may expect some kind of stability in the market from say July, August, September, from October onwards. So we can say from October onwards, so we have to look out the chart pattern on various stocks which are available at a good valuation and fundamentally sound. When we analyze the data, one more facts emerge. That is, whenever the bear market is not associated with the recession, the drawdown is much less. Last year, when we saw the bear market of 2020, it was associated with the recession also. So drawdown extended beyond 30%. It was something around 35-36%. Now, one more thing is very important. Many a times the stock market falls because of the panicking. Like in US, the inflation rate was higher than the estimated figure. While in case of India, it was lesser than the estimated figure. Now, US, there is a fear of further hike in the interest rate. Normally, the market is already priced in several interest rate hike which may forthcoming at the rate of 50 basis point. But now the fear is that the Fed may enhance the or accelerate the interest rate hike to 75 basis point. So 75 basis point, 75 basis point. And so Sometimes such vertical fall may be good in a stock market. As if now, is there fear of any recession? Will recession come? I am not a fortune teller. But yes, yield curve inverted on 1st of April certainly is a matter of worry. But if you analyze the data of all the 50 states of USA, the economic activity in all those states are rising. There is no significant fall. One more data says the worry of recession multiplies when more than 5 states economic activity start reducing. In India also, economic activity is not looking to reduce as of now. What will happen in future? It's very difficult. And that is why we say we must position ourselves into the stock market through hybrid analysis approach. Fundamentally good stocks and then combined with the technical analysis. And when reversal happens, it confirms because the price is got. So now looking at the previous bear markets, which were not associated with recession. As if now, since recession has not come, neither it is declared in USA nor in India. So let us not talk about the things which event has not taken place. So looking back to the historical price action, the average drawdown in a bear market not related with the recession has been to the tune of around 21 to 23, 24%. So which means the pain is not left much more. However, when we go to the price chart of S&P 500, we'll mark those levels where possibly the fall in the stock market may halt. Let us now check out the data with respect to the bear market, which were not associated with recession. So bear markets are better without a recession. Now this data speaks like, you can see the several drawdown, except in 1987, which was beyond 30%, was 33.5%. All other bear markets post World War II have seen a drawdown of around 19%, 20% or 28%, 22%. So the average calculates at around 23.8%, set 24%. The median stands at 21%. In recent time, S&P 500 has already witnessed a drawdown of 22%. So these are all bear markets which were not related with the recession. Now I am going to share with you very important and typical data which is related to the price action. With respect to the data, I'll try to explain what has happened recently in the stock market in the month of June 2022. Friends, don't go away. Watch this video till end and like the video and subscribe the channel. What typically has happened in the month of June 2022, if you check the price chart of S&P 500, that the price for 4 days in a row corrected more than 1%. That is a very rare occurrence in history of the stock market. But whenever it happens, the returns after this kind of pain for 4 days in a row, 1 year later, the stock market gives on an average of returns of 26.7% gain on an average. So which is phenomenal. And I would like to share one more thing. This time, the correction which has taken place 4 days in a row, more than 1%, was each day higher than the previous day. Such occurrence has been only 2 times in the history of the stock market. One was in March 2009 and second was December 2018. And each time if you check the price chart, whether Nifty or S&P 500, you'll find a phenomenal gain in the stock market. Will it happen this time? Let us watch and see. But first we should have a look to the data. So 4 days fall in a row, more than 1% at index level, that is S&P 500, has been in past a very limited number of times. If you see the stock market history of over 100 years, it has happened in 1962. It has happened in 62 again. Then it has happened in 87. In 2002, it has happened. And 2002, it has happened. And 2008 and 9 bear market, it has happened twice. One 4 days in history and one 7 days in a row. And in 2015, it has happened it has happened in 2018, 4, and in 2022, June, in the current month, it has happened. So each time when the market has fallen after 1 year, that is, I'm talking about with respect to the current scenario, June 2023, what could be the possibility? So market is given phenomenal return all over the time, and in 2015 it has given a return of 59.6%. But even if we calculate, the average stands at 26.7% and a median stands at nearly 24%, that is 23.9%. Now let us straightway go to the price chart of S&P 500 to understand the possibility where the stock market fall may halt. Now we are referring to the price chart of S&P 500 in monthly time frame. Can you see this trend line? This trend line is very significant trend, and it has been drawn from July 2010. So pretty long-term trend line. Price has taken support here, 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 and several times it has bounced back from this particular trend line. This was the exception in bear market of 2020, where the price went below this trend line, but there was no decisive breakdown, and then the next month price recovered and entered above the trend line with its closing price. Now let us go ahead and see, will this trend line may act as a support? The chances are quite high, because if we check the multiple possibilities, one is the possibility, number one is, this was the double bottom, apex of the double bottom was at 3,393. So price may correct to test the apex of the previous bottom, which was a resistance, might act as a support. But is this resistance area is only in isolated fashion can be seen? No, friends. We can see the price had broken out of this resistance area, again corrected, and then broke out. So this becomes, two dotted lines becomes a significant demand area with respect to the price action. And this trend line, which is a rising trend line holding good since 2010, is also intervening in this demand area. So considering the price action, where the price has seen multiple price rejection over here, it is 3,500 level, which means another drawdown of 5.5% is possible. And if we consider, if it happens and goes to 3,500, then the total overall drawdown from the previous peak, which was created in January 2022, will be 27.4%. So it will be within 30% as we discuss the historical data. So one key level to watch is 3,500. So another 5.5% correction. Now I am discussing the third possibility. And third possibility is very significant. If we check the retracement of this massive impulsive day, which has created a history in the stock market, that more than 100% return was given by the stock market in the shortest period of time historically, was post bear market 2020. Now, if we check the retracement level, 61.8% level comes at 3,766 level, which the price has tested in the current month. There is some kind of shadow formation at the lower, although the current month is not closed, so we cannot surely say that the correction is over. And This could be another possibility that the market has already made a bottom. But the bottom market has made is always confirmed at a later date, not at the time when the market makes a bottom. That is to be understood. That is to be understood, because ultimately we need some kind of a reversal chart pattern to have a confirmation. Now let us go to the weekly chart to have a look. This was the gap down in the current week, and we can see some kind of large lower shadow under formation, and that formation is not coming only at the golden ratio, but it has some kind of support over here. If I adjust this to a little lower level, you can see the price has taken support here, and support here, and some kind of reversal candlestick being formed. But can we see some kind of distribution pattern in S&P 500? I will draw some kind of chart pattern which will make the things clear. This is the left shoulder, price came down, made a head, and this is the falling neckline, it is forming. So this neckline itself will act as a resistance, and there is a gap also, which is a solid supply zone. So unless and until the prices start trading above 4,150, we cannot say that the current bottom is a final bottom for the bear market of 2022. Because this 4,150 level also coincides with 38.2% retracement level, which is a derivative of golden ratio. At the same time, price if goes past 4,150, the market cycle would be another high it will create, because we can see the price support, price rejection, price support. So 4,150 is a very, very significant and important level in S&P 500, and we should track that level. Let us go to the daily price chart. Yesterday, there is a formation of one byte soldier, and there is a good volume also. And it is nearly a morning star kind of formation. So on a daily price chart, what could be the possibility? Let us check. 4,150 is multiple time price was consolidating here, and it was a major breakdown after several days of consolidation. So again on the daily chart, it appears that 4,150 becomes a very important level. So can it form some kind of reversal chart pattern here? It could be a left shoulder here. If a head is in place, if at all, then it may go up, fall, and then price goes past 4,150, makes a new high, higher highs and higher lows kind of formation, and then it will be a confirmation of some kind of reversal in the trend. As of now, the buying which has come in the market on 15th June 2022 should be considered as a mere pullback, because S&P 500 in immediate terms has a very significant resistance at 3,900 level. Let us see whether the first obstacle of 3,900 is broken out or not. So bottom is in place, cannot be said, but it has tested golden ratio, which is significant. So bottom is in place would be confirmed something around when the price trades above 4,150, and let us conclude 4,200 to be on safer side. We'll keep on updating you, friends. And if you like this video presentation, give a lot of thumbs up to this video, share this video, subscribe the channel, hit the notification bell so that you remain updated all the time. Thank you very much for watching. Looking forward to meet you very, very soon.